Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the trading week ending Friday 11th of July. I was expecting to see an increase in downward momentum for Friday's session. That's not what happened. Price moved higher ever so slightly to overshoot that base channel I had on my hourly chart, but it remains comfortably below the invalidation point. I've adjusted the hourly chart just a little bit. I'm expecting now just a wee bit more upward movement to begin the new trading week, and when that's done, I'm expecting during Monday a trend change and the beginning of a strong third wave down. Overall, next week I'm still expecting downward movement. The most likely target remains at 1924. Let's have a look at the charts. This main wave count still has a higher probability than the alternate because it doesn't have as many rare structures. Both of them have the final target as the same, where minor wave 5 will reach equality in length with minor 3, and they'll both be long extensions. On the way up to minor wave 5, we're expecting to see the completion of 3 small fourth wave corrections interrupting the upward trend. This first one for sub-minuet wave 4 should be somewhat in proportion to its counterpart's second wave. This one lasted 17 days. So far this one has lasted 11 days, so it's likely to continue. This one is a sideways moving combination. This one is an expanded flat, so there's nice structural alternation. Within an expanded flat, the C wave usually moves comfortably beyond the end of the A wave. The structure of the C wave is really unlikely to be complete. Within this expanded flat, the B wave slightly overshoots the upper edge of this channel. That may be a precursor and indicator that the C wave should slightly overshoot the channel at the lower edge. This fourth wave may not move into first wave price territory below 1884.89. When it's done, I'll expect the resumption of the upward trend. The next target for it to be interrupted is 2010, where minuet wave 3 will reach 1.618, the length of minuet wave 1. So about that point I'll expect another interruption to the trend and a fourth wave correction then, which should be in proportion to this second wave correction, and then more upwards movement towards minute wave 3, and then another fourth wave correction which should be in proportion to this second wave, and a final upwards wave to the final target. And if this target is reached in October, if we see a big trend change in October, that would follow a pattern that's continued since the dot-com crash. Let's have a look at this possible expanded flat on the hourly chart, where it may begin here. This point here, it subdivides 3, 3, and we need a complete 5 down. It could be over there, but that would be a very rare running flat correction. And the C wave would be substantially truncated, so I'm not going to label it as over there. That's likely just wave 1 within micro C. I've adjusted the labelling within this downward piece now to see sub-micro wave 1 over here. Its fourth and second waves are out of proportion, but this now has a better look than seeing it as a 1, 2, 1, 2. If this is a second wave correction 1 degree lower, it's slightly breached the upper edge of that base channel. What I think is more likely is the second wave is a double zigzag for sub-micro wave 2. That's likely to move higher and maybe end about the 0.618 Fibonacci ratio of the first wave at 1273.02. It can't move beyond the start of the first wave above 1985.59. When it's done, we'll make sure the base channel is drawn correctly from the start of 1 to wherever 2 ends, then place a copy on 1. When it's done, I'll expect the third wave to have the power to break through the lower edge of that channel. This target may be met by the end of next week or early the following week. At 1924, microwave C would reach 2.618, the length of microwave A, and it is extremely likely to at least move a little bit beyond A to avoid a truncation and a very rare running flat. At the daily chart level, this is the alternate. If the main wave count is invalidated with movement above 1985.59, then this is the alternate I'll use. At that point, I'll expect that the interruption to the trend is over and that we're going to continue on up toward the target, which is the same as the main wave count. At 2010, minuet wave 3 would reach 1.618, the length of minuet wave 1. So about that target again would be expecting a fourth wave correction to be somewhat in proportion to its counterpart second wave for minuet wave 2. And then more upward movement for the third wave, another interruption, more upward movement for the fifth wave to reach the final target, which is the same. The invalidation point for this alternate is also the same, and the reason why it's an alternate is here we have a very rare running flat. So instead of 1, 2 over here, if it was over earlier, then we have a running flat for microwave 2, and that reduces the probability of this wave count to an alternate because it's a rare structure. And the bearish wave count remains the same. The subdivisions within primary wave C are seen in exactly the same way as the subdivisions within intermediate wave 1 for the bull wave count. The target's the same, and I'm still looking for a trend change in October. That's all for me today with your S&P analysis, and I hope all our members are having a fabulous weekend.